Joining in right now is Mr. Bhat, Managing Director at Dalton Capital Advisors. He's joining us on the show with his views as well. Mr. Bhat, thanks very much for joining in. Just as we're trading at fresh highs now, we've reached that 11,400 mark on the NIFTY as well. I mean, now you've seen the broader market starting to pitch in as well with the kind of moves you've seen. But how do you read this setup in terms of the global scenario as well and what's been coming across in terms of news flows from there?
I think the global risks are building up, largely because of the tariff barriers that you're seeing. There are a lot of toing and froing as far as the tariffs are concerned between US and China. Plus also you have US-Iran problems sort of cropping up, and even North Korea probably might not be doing what all it agreed in the summit with President Trump. So all these are sort of building up. Brexit is not going very well either. And interest rate hikes in US will continue quite fast. So therefore, all these sort of point towards some sort of lesser level of interest in emerging markets. If you see over the year to date, most of the emerging markets have given negative returns, probably except or not India. So therefore, I think these risks are building up. It is largely because of the domestic factors that the Indian market is finding itself at new highs every day, largely because economic activity is picking up. Except for the export front, on almost all of the fronts, India is doing reasonably well. So therefore, I think this probably cannot be this new highs every day cannot go on for a long till some bad news comes in. We have got state elections on the anvil, so all these will start sort of eating into these new highs quite soon.
Right, but do you think that considering that most of it is domestic buying, and over the last few months the FPI interest in the Indian markets has not been that great. June was 2,300 odd crores in the equity segment. So do you think they have an entry point, or do you think we should be happy about the fact that this rally is there domestically and not the fact that hot money can move out?
Well, hot money has been moving out to the order of about $1 billion, $1.5 billion per month, and that is more than compensated by domestic inflows. MF inflows, even the monthly sort of figures are quite high, about almost $1.5 to $2 billion. So it's more or less matched. So, but if the outflows are more accelerated, like say for example, even if it is 50% higher than here, I don't know whether domestic flows can match it, so therefore markets can correct. But we all have to celebrate when there is cheer around, and that is what is going on as of now.
Interesting. Mr. Bhat, one standout feature the last 15 days has been the money getting put into corporate-facing banks. SBI, ICICI regularly pop up on the list of gainers on odd days. At least they have stopped falling if they aren't going up meaningfully. Axis Bank is back in the limelight as well. Almost all the numbers indicated that while there was pain in the quarter, the commentary about what the quarters ahead realistically seemed a lot more positive. Are you a buyer now, corporate-facing banks? And including SBI out there, I want to ask you to comment on PSU banks, but that Axis, ICICI, yes, SBI, Quartet, would you be a buyer here?
Well, the commentary seems to be that the worst is sort of almost over. This has been said for the last 3-4 quarters now. So therefore, I mean, one really has to take it with a pinch of salt. But I think what one needs to see is that RBI probably is coming out with more list for NCLT. And once you refer a company to NCLT, you have to provide 50%. So therefore, that is something that can eat into profits going forward, because we are still at low double-digit numbers of references to NCLT. So it could be in hundreds. So if that happens, I think there will be probably further pain. And unless there's a robust revival in the economy where these companies which are facing the heat, they start turning around, this provision story is certainly not yet over. So therefore, I think it is good that some of the big marquee names have already been provided for. So that is why probably the market seems to be celebrating this. But I think there is further pain, at least for a few more quarters. Still, all these NCLT business is over.
So you're not a buyer?
I think you will get better entry points.
Interesting.
All right, Mr. Bhat, just coming to aviation as a space, pain points they're seen in this time's earnings, crude oil being where it is at, with the ATF prices bearing down on their profitability, and with steps and measures what Jet Airways has been taking. Do you think that's the right move for them? I mean, for the aviation space as a whole?
Well, what they're doing is the right thing, because profitability is either not there or it is sort of scraping the bottom, as it were. So when, of course, there's a reasonably good momentum in in PLF and stuff like that. I don't think they're really able to negotiate oil price hikes reasonably well, and they have demand. There's no doubt on that, but they really don't have pricing power because very sort of sensitive to pricing. So if they increase prices say by about 10-15%, I don't think this sort of demand would be there. So I think they are between rock and a hard place with oil prices going up, not being able to exercise pricing power. So I think that's where they are. So they need to compromise somewhere, which is in terms of bringing down costs, and that's what they're trying to do.
And what's the visibility till the end of the year, according to you? Because crude oil prices don't seem to be going anywhere right now.
Well, I think in terms of growth in top line, I don't think there should be too much of a problem. Yeah. But there may not be much of a growth in bottom line as we see if oil prices continue to be at this level and higher.
Interesting. There's a potential deal in the brewing in the AMC space. IDFC, the stock is up 5% by the way, so keep that at the back of your mind. We have a listing today, Mr. Bhat, as well. Formally a creation of sorts of the AMC space, RNAM being one, HDFC, AMC now, and a couple of indirect ones, IIFL and Motilal Oswal, etc. Valuations too demanding, or are you bullish?
Quite demanding, no doubt about it. It's quite
but you're
demanding.
Still bullish?
Not necessarily bullish. At these prices, I don't think you can be bullish. But I think there is a lot of celebration that the new space opening up. They are all potential entrants to the NIFTY and Sensex in good time. So therefore, one needs to be. And the market is celebrating this. But I think valuations are a bit stretched. At more than 10% of the assets under management. I don't know how. I mean, this is probably the highest ever anywhere in the world. So I think one needs to be concerned about these matters. So I think there will be more, and because of bidding war, where someone wants to enter and he's paying that entry premium. So these are the issues that are really haunting this space. So there might be excesses on account of that, but I think there's a good space to be in at probably lower valuations.
My wonder is, and by the way, there's some live footage from the HDFC AMC listing as well. The management and of course almost everybody who's anybody would be right out there or watching this because this is arguably the poster boy of the asset management companies in India finally getting listed, and we'll see a premium and a pop on listing as well. That's the top management, and we'll talk to them at about 10 o'clock or 10:15 as well. So do stay tuned for that too. But Mr. Bhat, that's the question really. It's a space which is probably at a premium to global peers.
Yeah.
But HDFC, AMC on return ratios, and it's not an ICICI which is so much superior than HDFC in the return ratio, and then still from the emerging market peers has the best return ratios as well. The growth path or the runway seems very strong. Maybe the valuations are okay.
Well, valuation is always an opinion. So therefore, the issue is, I think, if, as we discussed about aviation, the top line, I don't think there should be any problem because financialization of savings has just started. So therefore, there will be enough money to be enough growth there. Growth momentum should be there, but the earnings are not. I mean, most of the asset management companies probably work for distributors, and of course investors, but not really for themselves. So therefore, I think where they have very low sort of profits, PAT, I think that needs to the whole dynamics have to change to command these valuations. I think it may be on the anvil, so they might have more pricing power going forward. So I think that is what is embedded in the price now. But we will have to watch this space closely.
All right, listing will happen shortly, and HDFC AMC is what you'll be watching out for. Slightly stretched in valuations as per most of the guests that we've spoken about, but it's got the name, it's got the brand, commands the premium, so we'll have to wait and watch. Anything specific in terms of sectors that you've seen a lot of growth potential in, probably little neglected right now, but the upside there is still there?
No, at historic highs, I don't think there's anything that is neglected. Everything has been priced in. I mean, robust growth has been priced in, robust growth in earnings has been priced in, because I think the most important thing is after sort of crying wolf for the last probably 7-8 quarters, we've just seen earnings growth coming back to the market. So therefore, I think that is what is being celebrated because we've never seen double-digit growth for quite some time now, and this is what we're seeing in this June quarter. So therefore, I think that is what is really cheering up the market. But if that is really a turnaround in terms of earnings growth, except probably some spaces like public sector banks or maybe pharma, I think things look okay as far as earnings is concerned. But I think all the earnings growth that we can think of is already priced in.